Nike is currently going through some harsh time lately where over the past month it has lost over 20% of their total valuation. So today I'll be analyzing what is the true intrinsic value of this company to see whether or not it is a great buying opportunity at the moment. As always, I'll first check out at what is their business model, so how are they able to generate their income, and then I'll make a quick fundamental analysis followed by a price prediction to find what is the true value of it. So without further ado, let's take a closer look at what is this company. Nike is an athletic footwear and apparel corporation founded in 1964 that has the mission to bring inspiration and innovation to every athlete in the world. To do so, they are notably selling a bunch of different sportive products such as apparels, shoes, and accessories to their customers. Also, to be able to grow their brand and the popularity of their products over the past couple of decades, they've used the notoriety of famous athletes such as Michael Jordan, LeBron James, and Rafael Nadal. And so nowadays, with a current market cap of over $100 billion and by generating over $50 billion of revenue per year, this now makes that Nike is the world's largest sports brand in front of their main competitor, Adidas. However, compared to this competitor that has gained quite a lot of value over the past year, we can see that Nike hasn't followed the same trend. It is why it is crucial for you to understand what has caused this stock to lose that much value over the past year. First, you need to understand that over the past 3 years, it has been a bad stretch for all the sports athletic companies, for example, companies such as Lululemon, Adidas, and Under Armour, where we can see that all of these companies have been massively down since those 3 years. Add to this, Nike has also faced an apparent decline in their total global search and in their total popularity and in the attractiveness of their different products, which has been caused by high competition in the athletic apparel and footwear sector. And so even if we can see that in their latest earnings report, they have been able to increase their total net income by over 45% year over year, where their total earnings per share have also been increasing quite interestingly. Unfortunately, we can see that their total quarterly revenue have also been slightly dropping compared to the same quarter last year. Another thing that has been scaring many investors lately is the fact that the company has been saying that they were forecasting some pretty bad results for the same quarter next year. Indeed, year over year, they are forecasting some decrease in their total revenue and in their total profit because of the damage from its slumping China business. In fact, the analysts are predicting that it will come 10% below their 2021's record because of some slowdown in the total consumer demand in China. Nevertheless, it is still important to note that since the beginning of 2024, the company has been able to return over $6.4 billion to their investors, where we can see that it has been shared in the form of shares repurchase as well as great growing dividend that are paid to their shareholders every single quarter. However, on their side, the analysts have a pretty mitigate opinion of this company, where we can see that UBS analysts wrote to their client that due to their fundamental trends that are much worse than they realized, well, they were downgrading the rating of this company from a buy to a neutral position. On the other side, Evercore IZ analysts decided to maintain their buy rating on the company, where they've mentioned that investors will have to be patient with the turnaround story. Nevertheless, the athletic apparel sector is set to continue to grow over the next couple of years, and so if Nike is able to keep their position as a leader in that field, they should be able to continue to grow their total revenue over the next couple of years. But now, let's see what the different valuation metrics are telling us about the true intrinsic value of this company. First, we can notice that Nike currently worth over $110 billion, but with a pretty fair price to earnings ratio of less than 20, which is way below their competitors' P/E ratio, as I told you earlier, which would also be showing that this stock would be way more undervalued than them on that side. In terms of the profitability of the company, we can see that over the last 12 months, they've been able to achieve some pretty okay profit and operating margin of more than 10%. But what is truly interesting about the company is their massive return on equity over the last 12 months of of over 40% that they have achieved. For the same period, we can see that they've generated some revenue of over $51 billion, however, with some slight decrease in their latest quarterly revenue growth of less than 2%. But on the upper end, we can see that year over year, they've seen some interesting growth in their quarterly earnings of more than 45%. Another interesting fact about the company is that it currently has pretty much as much cash as their total debt, where we can also see that their debt to equity ratio is currently sitting at about 82%. In terms of the volatility of the company represents by the beta on a 5 years period, we can see that this company is pretty much tracking the entire market with a beta of slightly more than 1. However, we can see that its performance over the last 52 weeks of less 32% is way below the performance of the overall market of more than 23%. Then in terms of the quarterly dividend that they are giving to their shareholders, we can see that they currently have a dividend yield of slightly over 2%. But what is pretty interesting about it is that they have a super low payout ratio of less than 40%, which is showing that the dividend would still be sustainable in the long term if they wanted to increase it in the near future. Over the last 4 years, we can also see that their total revenue have been growing every single year, where however we've seen a slight diminution in their operating income in 2023 and in 2020, which has been result in a slight diminution of their total net income in the last year. In terms of their cash flow, we can see that it has been some pretty rough last 2 years, where we can see that notably their operating cash flow have been massively dropping compared to 2021, and so this has been reflected in their free cash flow that after seeing a massive boom in 2021, we see a certain slowdown over the last 2 years. Now, to determine what is the true value of Nike, we'll be using different valuation methods to help us with this task. Starting out as always with the Peter Lynch valuation model, which is a simple formula where you add the future growth of the earnings per share with the dividend yield and that you divide with the price to earnings ratio. And so with the dividend yield that isn't that big and some low growth that is predicted for the earnings per share for the future, we can see that the results would be showing that the stock would currently be quite overvalued right now. In terms of the second model that we'll be using, which is a dividend discounted model, unfortunately we won't be able to use it since we can see that our average growth rate is bigger than our weighted average cost of capital. But then jumping out to the third model, which is the discounted cash flow model, where we will simply discounted our future free cash flow to determine what is the future value of the company. We'll start by finding what is the cost of debt, the cost of equity, and the cost of debt and equity to find our weighted average cost of capital. And then with the projection of our free cash flow, we can find that our company's value would be at around $60 per share at the moment, which would be indicating that this company would currently be overvalued. Finally, for the last two models, we'll be using the Graham's original value formula and the Graham's revised value formula. And with both of these models, we also find that the value of this company would currently be quite overvalued compared to its true intrinsic value. As you've been able to see in this video, even if many different valuation models would be showing that this stock would currently be quite overvalued right now, well, surprisingly, we can see that different financial metrics are telling us otherwise. Indeed, when we compare an evaluation metric such as the price to earnings ratio of Nike compared to their main competitors such as Adidas or Under Armour, well, we can see that this company might be way more interesting than these ones. Obviously, this company is currently going through some harsh times because of the high competition that exists in their field with some project forecasts that are not that great, but knowing that they are currently the leader in that growing field, it might be a wise option for you to keep it on your watch list for the future. In any case, if you're currently wondering what are the different stocks and ETFs that I have in my own portfolio, well, check out the video that's gonna be right over here and I will see you soon. Peace!